let's just talk crypto markets, all crypto markets. I don't care what asset class you're in within crypto markets, what coin, what token, what asset, what project. I don't care. It doesn't matter. We're not at the bottom yet. What defines a good bottom is a panic event.
Hey guys, welcome to the Daily Crypto. No one likes losing money, but that seems to be the current trend we are experiencing right now. From inflation to bearish crypto, where do we go from here? Are more regulations the answer? How do we position ourselves for max profits when the bull run begins? Keep watching to find out as we answer these questions with Mr. Wonderful himself, Kevin O'Leary. Diving right into the heart of the situation, one of the most important topics right now is inflation. What must have caused it? Is it caused by outside factors or incompetence, or a deliberate assault on the economy? Kevin O'Leary weighs in on the grave issue, pointing out that there were some policy mistakes that were made earlier in the mandate over 2 years ago, particularly over energy. He adds that there are two pressure points that are causing all of this political activity. Watch.
One is inflation on energy. $5 to $7 gasoline per gallon is just a killer when it comes to midterm elections. There's no getting around that problem because people see that every time they fill up their truck or car. And then, of course, protein. The food supply chain in the U.S. from chicken on down is up between 30 and 48%. So food and energy are very political in nature because you're forcing families to spend so much more of what they make on things that they never had to worry about. Now they do, heating their homes and just feeding their families. And so it's very difficult to reverse the mistakes made in energy. Let's start there. Canceling the XL pipeline, canceling leaseholds on federal land, shutting down offshore development, canceling the activity that was going on in Alaska, which was very prolific in terms of providing gas and oil, really making it hard to figure out carbon costs if you're using any kind of fracking service. And so all of a sudden, of course, we're no longer energy independent. We're in a perverse situation that even before the Ukraine war, we had Russian tankers coming into Boston Harbor. So that's policy mistakes, and it takes time to fix that. When Biden goes over to Saudi Arabia to get more oil from them, it won't matter to energy prices in the U.S. because we don't have enough refinery capacity.
O'Leary also states that there should be more refineries in the United States.
Now, where this is going to manifest itself in a very ugly way is at any midterm election, the incumbent loses seats in the House. I fear for Biden's administration a complete slaughterfest in the midterm election. Everything's going to turn. It's going to be brutal. And I think, what do you do? What can you do? If you want balance, you're not going to get it here. There's going to be a lot of seats lost in the Democratic Party. And in a way, they did that to themselves on bad policy. And of course, they're scrambling, and anything can happen between now and the fourth quarter. But I'm not optimistic for him. And, he was given a mandate to solve for the pandemic. He did a reasonably good job there. But this energy policy and what happened in inflation caught him off guard. And I'm not sure what can be done to fix it because it's not getting better anytime soon.
In that case, what stance should the United States take on Bitcoin and crypto policies in general? O'Leary begins from his perspective of working in financial services and within the system on a regulated basis. Watch.
Suing the SEC is a really bad idea. It virtually never works. They have unlimited resources. It's a bravado thing to do, and I'm sure others in the industry are applauding this, but the outcome is never good because they don't like getting sued, and they have tremendous powers to avoid being embarrassed. And trying to embarrass the regulator into submission, well, Pomp, that just doesn't work.
He continues on cryptocurrencies.
In terms of getting some policy in crypto. And we should talk about the next 6 months because you've got lots of evidence now of bipartisan interest in getting some policy in place, not in a combat way by suing regulators, but in a way in cooperation on a bipartisan basis. And let's make it real easy, okay? We're not going to get everything regulated overnight. We may not get an ETF in the US for 2 or 3 more years, but that's not the only thing that matters. What I'd like to see, and a lot of others too, would take one asset, a really bipartisan asset in the form of stablecoin. Now, not all stablecoins were created equal. We know the meltdown in Luna. That story is well known. Algorithmic-based, stablecoins may not be the best idea. Be very hard to launch another one. But assets like USDC that are backed by the US dollar have not broken a buck recently. And if that was made and was allowed to be regulated, it could become the default payment service for the world.
We should look forward to that. Plus, O'Leary adds, it makes a lot of sense since a whole lot of commodities are paid for in the US dollar. He continues.
Imagine if you could use USDC to transfer between jurisdictions and geographies. It's far more efficient, better ledger, more transparent, lower cost, way faster. What senator doesn't like that idea, making the US dollar king dollar, keeping it at the supreme default currency? I don't care what party you're in, that's a good idea. The policy being proposed by the Toomey and Haggerty bills, and even contemplated in the Lummis bill, which has much more than just stablecoin. Let's just take the stablecoin.
Still on crypto policies, Kevin O'Leary adds,
everybody in the crypto industry, including all the institutions that don't own it yet, would see the very first marker of policy on a very basic asset, stablecoins, and contemplated in the policies, very simple. Full audit every 30 days. What's wrong with that? Makes sense to me. And no assets held supporting the token or coin with a duration longer than 12 months.
He mentions that he has been working hard on this for the past 3 months, trying to make it happen, even within his power as a private citizen. O'Leary mentions that Fidelity and BlackRock have each put $200 million into Circle, a Series F, adding that this isn't accommodating and supporting the notion of a regulated stablecoin. It's hard to say what is, because these are some of the most conservative financial institutions in the world supporting the idea of a stablecoin backed by the US dollar. So moving on to disclosures, how do we prevent what happened with Luna from happening again? What is the most likely outcome of this path? A solution or a stalemate? O'Leary comments on this, saying that there would have to be more transparency. He continues.
Of institutional capital have been waiting to come into the crypto market. Just in a payment system alone, let's say 4 or 5 different stable coins got licensed, it would be a phenomenal outcome because you would, for the first time, be able to get a 1 or 2 or 3% indexed allocation from sovereign funds running $500 to $900 billion, the kind of guys that I service in the indexing business. I'm not the only person doing it. There's lots of others. But we talk to these funds all the time, and they say the same thing over and over again. Give me some policy, show me I'm not offside with the SEC, and I'll give you a 1% allocation, sometimes a 3% allocation. That goes for Bitcoin, that goes for Ethereum, Solana, Polygon, stablecoins. Just give me a regulated position. That's all they want. So for all of the angst and all the headaches and everybody worrying and gnashing their teeth and rubbing their hands together about disclosure, who cares? Let's get this policy done. And if you want to see Bitcoin $100,000, that's how you're going to do it.
You might be wondering, what is the best technique to employ when entering trades? Do we dive in big on a position or dollar cost average our way in? O'Leary answers saying timing the bottom is almost impossible, and he has never been able to do it, so he has started to layer in, not even in crypto, but in equities now, because it is still not at the bottom there either.
P's are still a little expensive. I anticipate if we could get down to 15.5 P on the S&P, then you can cherry pick the top 100, highest quality balance sheets in the S&P 500, and that'd probably be a good place to put some money to work. And you'd be layering in. Nobody knows about the recession. It's pretty hard to have a recession of full unemployment. Full employment. I mean, we don't have any. This is not your typical recession, I can tell you that. I haven't even seen any results yet of private companies I've invested in slowing down at all yet. We can't even hire anybody. So we're in a different kind of time right now, and we'll have to see where that goes. But in crypto, you get a lot more volatility. And, obviously the granddaddy asset is Bitcoin. It's holding its own at 20,000. But if you saw that spike down in a panic sell-off, that somebody had to off their coin because they're, being margin called out, and that thing dropped to 15,000 or something, that would be a good place to start putting money to work in again. And I'm not saying it will or won't happen. It's just, we're not at the bottom yet.
Let's keep our fingers crossed then. So how much leverage should we use in crypto? O'Leary answers bluntly.
It can go to zero and it doesn't wipe me out. Crypto is not leverageable yet. It needs to have policy, and it needs to be regulated, and then the volatility will go down. Then you can put on some leverage to goose returns. The guys that put on the leverage are wiped out, and every day you hear another story, wiped out to zero.
What do we make of the price drop we have experienced recently alongside the drop of Bitcoin's price? O'Leary begins by clearly stating that this problem started after the original memo was received from the SEC about 5 months ago. The memo was all about the auditing of the carbon credits of crypto miners. Watch.
Talking about carbon credits being audited. And so basically what's happened since is, and this is a little complicated, but the data is irrefutable now. When you set up a mining operation, as we had multiple public miners last year, they were being used as a proxy by institutions to buy Bitcoin because the price of the mining shares, whether it was a Hut 8 or a Riot or Marathon, and many others, really was a great proxy for Bitcoin volatility. You bought those shares, Bitcoin goes up, the shares went up. Bitcoin goes down, the shares go down. It was almost a perfect correlation, regardless of how many megawatts each of these companies had mining.
Thanks for watching this video. What do you think of O'Leary's USDC proposition? Let us know what you think in the comments section below. Don't forget to like, share, and subscribe to our YouTube channel. See you on the next one. Bye for now.